What's up, everybody? It's your boy Satt coming to you with today's stock pick, indicator help, and general investment tips. Remember, this channel is all about no face, just facts in 5. I do the research so you don't have to. Shout out to 11 Labs for making every video possible with their next-gen voice cloning and text-to-speech tools. Link in the description and profile. Let's dive in. SpaceX is back in the headlines, but this time it's not just about rockets, Starlink, or IPO. This story is about foreign investor questions, private market access, and why regulators may be paying attention. ProPublica reported that investors with addresses tied to mainland China, Hong Kong, and Russia acquired SpaceX stakes years before the IPO through a U.S. middleman firm called Tamales Bay Capital. Reuters also reported earlier that SpaceX underwriters barred China and Hong Kong investors from participating in the IPO because of regulatory and compliance concerns. So let's break down what happened, why it matters, and what investors should watch. Let's start with the news. The headline is SpaceX IPO Scrutiny. The IPO hype has been huge because SpaceX is one of the most important private companies in the world, with rockets, Starlink, defense work, satellite launches, and massive demand. But when a company tied to national security faces questions about foreign investor access, that changes the conversation. This is no longer just a valuation story. This becomes a scrutiny story. Now let's talk about the report. According to ProPublica, records showed foreign-linked investors acquired pre-IPO stakes in SpaceX through Tamales Bay Capital, a U.S. firm. The reporting says those stakes were acquired before the public offering, and that raises questions about who had private market exposure before regular public investors ever had a chance. The concern is not simply that foreign investors exist. The concern is that SpaceX works in areas tied to rockets, satellite systems, communications, and defense, so access questions become more sensitive than they would be for a regular consumer company. Reports said investors from China and Hong Kong were blocked from the IPO, but ProPublica says private stakes had already been acquired by some foreign-linked investors. That creates the central question. If certain investors were considered too risky or too complicated for the IPO process, how did foreign-linked exposure happen in the private market? To be clear, this does not automatically mean SpaceX broke the law, but it does mean the story creates a new layer of disclosure concern and political headline risk. Now let's talk about why this matters. SpaceX is not just another tech company. This company launches rockets, operates Starlink, works with satellite communication systems, and has deep ties to U.S. defense and government contracts. That means foreign ownership scrutiny matters more than it would for a normal IPO. When sensitive technology, Pentagon satellite work, and global communications infrastructure are involved, regulators and lawmakers may want more clarity on who had exposure, how they got it, and whether any ownership created national security concerns. Now let's talk about what investors should watch. First is regulatory pressure. If this story gets more attention, regulators could ask questions about access and foreign ownership. Second is disclosure questions. Investors may want to know how much foreign-linked exposure exists and whether it was properly reviewed. Third is political headline risk, because SpaceX sits at the intersection of business, defense, space, technology, and geopolitics. Fourth is IPO valuation pressure. If investors get nervous about scrutiny, it can weigh on sentiment, even if the business remains strong. Now let's talk bullish versus risks. On the bullish side, SpaceX demand is still huge. The company has one of the strongest space and satellite brands in the world. The IPO hype is enormous, and the combination of rockets, Starlink, defense work, and communications infrastructure gives SpaceX a real moat. But on the risk side, scrutiny is serious. Regulatory review could become a bigger issue, and valuation risk matters if the market starts pricing in more uncertainty. A great company can still face a tough headline cycle. Here's Satt's take. I'm giving this a 6.5 out of 10 watchlist rating, and the reason is simple. SpaceX is a big company with a big story, but now it also has big scrutiny. I'm not saying the business is broken. I'm not saying the IPO is doomed. I'm saying investors need clarity. Who had access before the IPO? How much foreign-linked exposure exists? Were the right reviews done? And could this become a bigger political or regulatory issue? For now, this is not a panic story, but it is absolutely a headline risk story. Watch the news, watch the response, and watch how investors react if more details come out. Remember, I'm not a financial advisor, and this is not financial advice. Do your own research, manage your own risk, and never invest what you can't lose. If this breakdown helped you, smash that like button, subscribe, and drop a comment with the next stock or market story you want me to cover. This is Satt with Stocks by Satt 06. No face, just facts in 5. Keep learning, keep investing, keep building. Peace.